Shelling out money, anything, ayy. Ooh, got the foot on the gas, pedal to the metal when I'm get to the bag, ayy. Got the foot on the gas, pedal to the metal when the lane moving fast, ayy. Ayy, let them all cross. If they hate, then let them hate and make a bigger boss, ayy.
Hey guys, before we jump into the episode, I wanted to let you know it is brought to you by the NMFTA. Let me ask you a question. Do you ship LTL freight? Then listen up, because the NMFC changes went live on July 19th, and they're the biggest updates in the history of freight classification. Now more than ever, accuracy matters. That's why carriers, shippers, and brokers alike are turning to Class IT Plus, the NMFTA's new digital platform for real-time NMFC data. Stop guessing, start classifying smarter, and quote freight with confidence. It's time to get your ship together because the NMFC changes are already here. Learn more at nmfcchanges.com and get started with Class IT Plus at classitplus.com. Just do me a favor and let them know that the Freight Coach sent you. This episode is brought to you by SPI Logistics, the premier freight agent logistics firm in North America. For over 40 years, SPI has been diligently building the most successful freight agent network to provide first-class relationships for our shippers, receivers, and carrier partners. We are more than another transportation network. We are a dedicated team of professionals united by one singular purpose, and that is to expedite our agents' success. All of our agents are set up for success on day one, as they are provided with a full suite of support staff that is ready to assist them with everything from after-hours emergencies to financial and administrative needs on a no-fee basis. This way, you can focus on continuing to grow your business. There is no financial risk to start, and you have the ability to earn up to 75% in commissions. If you are looking to take control of your financial future and build your business with the backing of one of the most successful logistics firms in North America, visit www.spi3pl.com to learn more. Do me a favor and let them know that the Freight Coach sent you.
What is up, ladies and gentlemen? We are back. We are live. It is the Freight Coach Podcast, the top podcast in transportation, coming to you guys every single weekday, 8:30 a.m. Pacific, 10:30 Central, which we're not at right now, you guys. We had to move this one around. And frankly, I wanted to schedule this right in the middle of March Madness for all of you guys who should be working right now that have the games going on in the background. And today, we're going to be talking about everything that you guys want to know. It's shippers. What's going on out there? What are they doing with all of this data? And how can we, as transportation providers, package this all up and really get in front of them and talk to them a little bit more in depth on that? And I got none other than the Ohio State University's #1 fan by far, Mr. Ken Adamo, back on the show. Ken, thank you so much for joining. And it looks like you guys are tied with Teeth and you right now, just an FYI.
Yeah, I think it says a lot about how highly I think of you because I'm doing this while Ohio State's playing probably its only March Madness game of the year.
I appreciate it. I appreciate you taking the time to jump on today and break it all down. Especially, honestly, man, I've been for as much as I follow sports, I forgot that March Madness was starting this week, to be honest with you, until I got notification that the first four playing game or whatever it was on Tuesday night was on. I was like, oh crap. I didn't even fill out a bracket, to be honest with you.
There's no actual reason other than I have an extremely addictive personality. I don't gamble. So sometimes I'll fill out a bracket for fun, but I don't know. I don't watch. When I was in high school, I can remember the best bracket I've ever had was when Maryland won. I think I was a junior in high school when Maryland won the whole thing. But I just don't follow it enough. It's my favorite sporting event. It's like the Masters and March Madness. You think being a college football nut, there's no singular event that does it for me like March Madness. So dude, I can't wait.
March Madness was the thing that we would do because when I lived up in Reno, all the casinos had. It was dude, it used to be $50 all you could eat, all you can drink. And not bottom shelf stuff, literally top shelf everything. It was the best 72 hours ever because nobody ever made it till Sunday. It was Monday or Thursday, Friday, gangbuster, Saturday, everybody was dragging. But man, you could just go in and you just place parlays all day long. And I'm right there with you from a gambling perspective. And I think that's why I love entrepreneurship so much, Ken. I'm an addictive gambler at heart. And it's why not just gamble your entire family's future on your ability to read freight markets?
From your mouth to God's ears.
No, that's it, man. So, dude, what's been going on? I mean, as always, there's always another headline that's out there. I've taken the stance of there's always going to be something we got to find a way to win. And, I look at a lot of what is going on right now in the market. And obviously fuel over these last couple of days has skyrocketed out there. I think the national average for a fuel surcharge right now is like almost 80 cents a mile out there. At least my customer that does line haul plus fuel in their pricing, we were pushing almost 80 cents out there. So it's like there's a massive increase in fuel prices. And, you know, again, it's like there's so much coming at people at all times. It's like, I think like you still got to focus in on the stability factor. Where is that marker that's going to kind of perform the exact same way every year? Because who knows how long that this spike is going to happen for.
Yeah, I think you, in the spirit of March Madness, like I was doing this thing of like winners and losers. And, you know, unfortunately, the only real category I think that wins in this environment is, I'm sorry, the one that loses in the environment is small carriers, which they really can't afford it at the moment, right? They've been enjoying. I took a look at the numbers this morning just in prep for this. So it's not doom and gloom. I think that's what gets like easily contorted. You know, rates even adjusted for fuel, which I think is the appropriate way to look at it, because if you're a carrier, you know, what you're really capturing is your base. You know, they're still up 15% year over year, which I think anyone given the last 3 years would take in a heartbeat. The problem is like they were up 25%, right? Like, you know, during the winter storm, I think everyone got a taste of what the good old days were like. And these fuel prices are just absolutely slamming profitability for carriers compared to earlier in the year. I think that's like the important, you know, compared to years past, it's still great. But I think some of that like head padding falls on deaf ears with carriers who are like, well, yeah, but the last 3 years are terrible. So 15% over 3 years of zero isn't exactly lighting the world on fire in terms of like plowing more profitability to the bottom line.
So like, what are some of the bigger data points that shippers are looking at right now? You know, like, is it, you know, freight volumes as a whole? Is it, you know, consumer credit card debt? Like, what are some of those data points where they're looking at and kind of like going about and assessing, what do we do out here?
So actually interesting, I think. So I took over the shipper business here a little over 4 months ago. And my goal, my belief in business in general is like, you're never going to be successful if you aren't constantly in touch with your customers. And love shippers. It's been super fun. They're a little bit less exciting than brokers. Generally speaking, there's little tighter corporate governance restrictions that happen with shippers around, you know, major golf vacations and whatnot. But they think about things a little different in the sense of fuel is something you could take to your boss and say, look, I didn't start the war in Iran. I know that our budget's running high right now, but a lot of that is fuel spend. And what shippers are seeing is their tender rejections are actually going down. So tender acceptance is going up because carriers are going to the safe haven, which is contract freight that has fuel surcharges. So if you're a carrier that runs both spotty and contract freight, the last couple of months, you're probably you're rejecting freight. Obviously, we know tender rejection rates are up. So you're rejecting contract freight and hauling spot because the rates were so great.
Yeah. And
the rates are still good. But if you have a 7 to 10% contract rate inflation, right, and you get full fuel recapture there and a few miles per gallon better than the fuel peg that your shipper's paying you, that's a little bit more of an attractive proposition right now than trying to, you know, knife fight in the spot market.
I pay attention, obviously, to everything that goes on out there, and I look at, you know, tender rejections as a whole. It's a data point, but it's not that significant of a data point to me because like there's a lot of factors that come in. You brought up the weather aspect of it, Ken, and that's when everybody was going kind of haywire earlier this year. And I'm always like, if there is a major event you can point to, that is an artificial rate for that moment. And there was so much weather events that happened earlier this year. And again, when there's large portions of the country that are blanketed by snow that don't historically have snow, that has a ripple effect kind of across the entire country. And you would think, how does the Arizona freight market get affected when Tennessee has snow? And I'm going to tell you, I had 15 loads that were picking up. My core carrier just happened to be in that Tennessee region. All of their stuff got delayed. And there's just a ripple effect that kind of can come along with it. Now, is it the most significant thing in the world? No, it's not. But I feel like people are like, they just pull its strings sometimes. And again, I can't go I look at it as like kind of like the boy who cried wolf. If I went to my customer every single time there was an event in some part of the country, oh, hey, I need more money because, this person had this happen in Philadelphia, like that's a losing strategy in my mind, because I like the customers that I go after, who I'm working with and who I'm prospecting. I want to be the subject matter expert in their eyes. I want to be the voice of reason. I want to be stable in their eyes, where it's like, hey, this is a short-term blip, that there's going to be something. If this drags on after a certain point, we can have a conversation at that time. I just think a lot of people are too quick to rush to change, and then they put themselves in trouble, because there's people out there who are kind of like waiting for them to do that. And then they come in and they capture that volume, and then they're not going to let that volume go away.
Yeah, I mean, I'm a Midwest simpleton. I went to 2 state schools. I like Occam's razor really resonates to me, right? Which is the simplest explanation is often the correct one. And so I think like you either believe that the reasons rates spiked the exact day that a winter storm happened was either that was the single day that the manufacturing renaissance, quote unquote, started in North America, or there was a winter storm. Now rates were up before that. So I do think like it's multi-factored. Like capacity is at it. Like if you ask me, what are shippers asking us for? One, it's to be boring, right? Like you can check the receipts if pressed, but I can tell you, I probably get 5 to 10 emails a week from shippers with the headline, some form or fashion of like rate propaganda. like this idea that rates are going up and to the right in this endless bull market right now. And I think that could be true, but also like there's no real actual evidence to back that up at the moment. So I think what the shippers are saying is, hey, can you show us where the macro capacity pool is? And I think all of the evidence points to that being at equilibrium, probably bordering on being a little undersold right now, which I think really explains what happened in the fourth quarter of last year. Because there was weather then, but it wasn't as nearly as pronounced. And, I think it was just a healthy shipping peak. There wasn't as much capacity to go around in some years prior, and rates felt the brunt of it. So then we get into this year. I think it's interesting, right? Like when you're making 100 different like ultra bold proclamations, it's hard to say like, well, if I separate them all out on the table, one of those was if tariffs get overturned, it's going to be the start of this trucking super cycle. Well, tariffs got overturned and like literally nothing has happened.
Correct.
Which surprises me. Like in that, like I was a little bit wrong there because I expected there to be some bump and there wasn't. So I think like everyone's waiting for, and again, if I was a shipper or if I would ask a bunch of shippers, what they want is just like a big if then map. Like, hey, what's your view of what would happen to the market if this happened? Or what? Like, they don't want to, in my opinion, be told, here's my parlay, to use your term, of like, here's the 9 things that are going to happen. We're going to have like at this point, we would be on our 13th super cycle of the last 9 months, right? And it's just not. I just don't think it's the way that it works. And then fuel all of a sudden comes out of left field and just whacks the entire market in a way that no one could have predicted, right? Like this is why you don't buy freight market.
Yeah. I no matter what, I think that people need to accept that there's always going to be something, Ken, but customers don't hire you when it's easy. Like, and I think that like, it's just human nature, right? Everybody wants easy, like it's just ingrained in us. But I look at it as as a service provider, when there are adverse situations that happen, i.e. service failures or, there's delays or whatever, I could list off 37 different things that I deal with on a daily basis in regards to moving my customers' freight. Ultimately, they're looking for me to say, hey, we got you covered. This is our rate. This is the driver's ETA. Like what in its simplest of terms. And I think people at times overcomplicate that. Like, again, fuel, just to bring up this again, that's just another thing right now. Again, you can explain it to them, but if you just bang that drum nonstop of like, oh, this is what's going on, this is why, eventually it's just the boy who cried wolf, in my opinion. Like they need professionals to step in and actually service them, because we're not at a time in the market where there is 1 truck to 10 loads or 1 truck to 5 loads. There is capacity that's out there, and at times as a broker, you got to look at it like this. For me, this is just how I operate. If I quoted my customer 3 weeks ago and then Iran got invaded and now all of a sudden fuel spike, I'm honoring that rate. I'm not rejecting that rate to them at all. I told you that this is what it's going to be. I gotta wear it in the short term. On a couple of things, we adjust our pricing accordingly. But again, a lot of things can happen because like what if all of a sudden, things get cleaned up, and I know it's going to take a little bit of time for fuel to drop. But like if you raise your rates and then you're going to be priced yourself out of it, right? Like there's a lot of things at play. And I think that in today's environment, people are way too quick to pull the trigger to change and raise or drop their prices. And they just put themselves in a bad situation. I feel like exercising caution right now is the best play to take with a lot of your customers, because I see it with the customers that we move freight for. There's a lot more load availability in the short term here than there was. And unfortunately, this is the problem when you go in and you bid cheap and you know you're bidding cheap, and then you can't stomach a $400 loss on a load because your boss is telling you you can't do it. And then there's your competition out there who's going to come in and take that load. They're going to service that account in the short term. And now all of a sudden there's more and more volume that's coming on. I think ultimately, in its simplest, it doesn't matter if it's an enterprise shipper, Ken, or a customer who moves one truckload, they expect you to honor your commitments when you're coming out there.
Yeah, I mean, I could tell you stories like even the last few weeks of large providers that kind of drank the Kool-Aid and just came out swinging in RFPs and are getting massively punished in their awarded volume. I think. Now, look, I think those brokers live to fight another day, right? The brokers that won the volume, if they didn't do it the right way, if they were taking the ostrich method of just bidding as if nothing was going on, they're probably going to get whacked in 3 or 4 months when they can't service the business. I think the best strategies at the moment are having honest conversations with your shippers about, hey, this is the price based on what I think is going to happen. So be transparent in where you think the market's going to go. And look, can I get your commitment to a handshake agreement to take a look at this in 6 months and we can reevaluate? If I was right about the market, I don't need to make any changes. If I was drastically wrong, we might need to adjust some things in either direction, right? Also, we're seeing a absolute record number of requests for index-based pricing from shippers. It is probably the hot topic du jour amongst all of the calls that I'm on, where shippers want the flexibility to share in some of the market risk with their providers without having to go back to bid every 3 to 6 months if this volatility continues.
Yeah. So do you think that the kind of wait, like, I'm trying to think of the best way to word this, but it's like, is there a lot more wait and see out there from the shipper community, do you think, on, like rebids, for example? I think that that's one thing that might come about. Like, say this is a very prolonged thing and everybody's getting killed, right? I think like most people need to understand that like your customers don't want you to, continuously lose money over, but like, I also think that people are too quick to kind of shift their pricing strategy in the short term. Do you think that there's that, or are people going to just kind of dig their feet and be like, why did you quote this? They're like, why did you quote this low?
There's hard to have, like in freight, one size fits all answers are tough. I think what I heard from most shippers was they weren't, especially the bids they did in Q4 or even late Q3, they weren't going to rebid. They were just going to take it on the chin in the spot market. I mean, mechanically, the way a lot of these things are set up is like, let's say you have 10 core providers, all 10, falls through a waterfall tender, they all reject. They might also go to a backup list where they can set their number before it goes to like the broader spot market. Shippers that have that set up, shippers that have spot portals, buy invite only spot portals, I think they've been flexing that. So like if you just locked in rates at 3 to 5% in Q4 and you're running a little bit higher spot volume at 20, plus 20% in Q1, that's actually not so bad if it does come back down after. You know what I mean? You're just doing that risk calculus, which is not overly complicated in my opinion. I think what they're seeing now is, our kind of official technical forecast, and I think it aligns with a lot of what others have said, and this was pre-fuel, is that this year is probably going to run most of the year between 16 and 20% on the spot market up year on year, which means you'll probably see contract rates by the end of the year settle in the 12 to 14% range by the end. Now, I think fuel is, if it stays this high, I think it will cause some revision of those forecasts. But those numbers sound big. Like Chris Pickett, famous Coyote Curve. I'm sure you know Chris.
Oh yeah,
made a ton of headlines. I've probably gotten 200 phone calls at this point after his bull call in February that spot rates will hit 40% up year on year by the end of the year. That does sound crazy, but at the end of the day, over 3 years of nothing, that's still only a compounded annual growth rate in the low double digits. So it's not like that's setting the world on fire in terms of like the fact that there's been no rate growth for many years at this point.
Mm-hmm. Do you like, so I guess how are people, because like I've been through, I think the last like major volatile year that it's been about 10 years now. It was like 2016 was like the last major volatile year of rates where like I remember a couple of our large enterprise shippers, we did like 3 rebids that year. And I think it was around the polar vortex time. It could have been 2017. But I just remember, because like, dude, we were paying like 15 grand from Seattle to like Columbus, Ohio, I'm pretty sure at that time. Like it was like insanely high rates. That was the last time I remember a major like multi-time cycle happened throughout a year. Do you think that with fuel and say, again, I don't want to play doomsday here, but say the conflict in the Middle East continues to intense, and amplify out there, could that cause a lot more of a ripple effect on what's going on? Because again, you look at the Strait of Hormuz, I can never pronounce it. Hormuz, sorry. You look at that and the amount of global trade that goes through there, like what could that be a thing a little bit later on down the year, or is that kind of a wait and see approach?
I think again, you get in trouble when you make these. I think like the primary out of left field negative, like bearish black swan would be like a major macroeconomic slowdown / recession / the Fed doesn't cut rates at all this year. Housing and lumber and all these prices remain unaffordable. We don't see any of that tailwind that we were hoping for. And the economy just sort of, the Fed's report yesterday, obviously they weren't expecting, the markets weren't pricing in a rate cut. They were pricing in 2 more. We're kind of caught in this in between where growth is running hot enough to offset how hot inflation is running. So the Fed's kind of sort of stuck. This notion that Powell's replacement will actually get appointed during a midterm, he may be the pro temp chairman even after his term ends. There's just a lot of economic uncertainty.
Mm-hmm.
There's a lot more reasons to be optimistic, frankly. I mean, with this infrastructure spending, I mean, again, we're in the weeds of transportation, but try to get limestone in the Midwest and upper Northeast right now. It's like impossible. Between fuel prices and infrastructure projects right now, in many parts of the country, asphalt is pricing out higher than concrete. That's actually a really good sign.
Yeah.
Data centers and all of the surrounding infrastructure for data centers has flatbeds on a tear.
Yeah, I'm glad you brought that up. That right there, I think that's going to be the biggest curveball in flatbed capacity this year. And I mean, dude, we're seeing it out here in Arizona alone. There's multiple projects going out here in the Phoenix metro with that. And, a lot of our carriers that we're operating with who are coming out here right now, like, I mean, it's great for outbound Arizona freight. I'm going to be honest with you. There's going to be a lot of capacity that is going to be coming available the more and more that these data centers be coming up into full swing here. But I think that if you want a good indicator on where things are, follow data center construction around the country. Because I mean, I was just listening to a podcast about this here this morning, and like the average cost of a data center is like some $600 billion or something like that is what it costs to actually build it out for what it's going to be used for. So again, that's a lot of material that's going in and out of some of these locations. So it's like, if you're going out there and you're prospecting business, follow somewhere where some data center construction's going in, you're going to find a lot of excess capacity. Granted, if they're not being paid round trip miles to keep them going back to the manufacturer of the steel and wherever else they're bringing out there.
Yeah, and between that and fracking will pick up, or has picked up due to the energy prices. I think flatbed's in a good spot. I don't know. I think, look, I count myself in this camp, and if I think about like my tenure at DAT thus far, it's over 6 years. I think the area that I'm most proud of maturing, and this isn't a technical term, but there's just way too many people like sniffing their own farts out there. Like, that's the best way I could describe it. Like, I think like this industry, like when you surround yourself in this just like aura of seriousness and everything, like it's just not actually how all of this works. It's how I came into this, coming from the industry to tech. I know everything. I've been there. I've done that. I think what I've tried to mature and develop my own personal is like, I don't know. I mean, like, I think busy peak, we're out of capacity. There's some capacity pressure with ICE and the non-domicile stuff happening on the capacity side. The economy's not doing great, but it's not doing terrible. It probably means we're going to have a growth year for freight. when I think of volatility, like you're right about that year. Was it 14 that you mentioned, right? 14.
Yeah, something.
Yeah, that cycle was very interesting because I always compare what I think is going to happen here to that. But the last 10 years prior, like once the market got rolling and pointing in a direction, it didn't deviate. It took pretty straight lines, right, of where it was headed and where it was going. So I think it could be a choppy year. But I overall think we'll probably wrap this year feeling like it was the best since 22. Is that a safe bet? Probably the best year since 22. I know like a lot of like there's certain folks who would say like 22 was a bad year because like in theory the great trucking recession started, but I don't actually subscribe. I think that probably either happened officially later in the year or even early in 23. Like every transportation company I know of had record years in 22.
Yeah.
So
I think that 2027 is the year that people are hoping 2026 is going to be. I just don't. There just has to be. I'm an optimistic realist, Ken. That's how I always approach everything. Like I hope for the best in every situation that I come across. But I look at it as I'm on the front lines cold calling and prospecting people. Okay. I have conversations with people every single day. Their buyer sentiment has not changed at all. Like at all. I am of the mindset, and again, Freight Coach Logistics would exponentially benefit from this if I am wrong. Every shipper out there today has ample capacity in their network to weather any of the foreseeable storms that could happen of any tightness that could come on here if fuel prices go up. I think the big thing is the longer fuel prices stay elevated, that will cause more capacity to leave the market than I think even non-domiciled CDLs out there because guys can't afford to run. And that's going to disproportionately affect the smaller fleets over anything. And I think that would cause guys to park their trucks. I do. And I think that would be the only thing that would possibly cause people to open up their eyes to, hey, maybe we need some additional providers to come into our network this year. I just think that there's a lot more positivity going on behind the scenes that people don't want to openly admit for whatever reason. But again, I'm not trying to sell anybody a subscription to anything. I'm just trying to tell you guys how I assess markets by somebody who actually moves freight. And I think that you need to be extremely diligent and honor your commitments right now, because if you don't, people's tolerance for failure will be slim to none. And you're going to find yourself outside of the door with a lot of your customers.
I think, and I said this to a large broker yesterday, I think 2027 has the potential to be the best year in the modern history of freight brokerage. Like I think, and the reason I say that is I think this year will be a good year. I think last year was a horrific year.
Yeah.
like the brokers always lag, right? So I think like brokers clean up on the bumpers of when the freight cycles turn because they make more of their money when the market's like it has an arbitrage opportunity when it's moving. And I mean, the Delilah's Law yesterday, I don't know if you saw it, but one of the things in there that wasn't widely publicized until yesterday is a kind of flat out ban on foreign dispatch.
Yep.
There's a lot of chatter and with this administration, I think it could gain legs of like principal owners of trucking companies need to be U.S. citizens, not even like legal U.S. workers, but U.S. citizens. So I think like this could be a year. Again, I am classically trained, I think, to think of everything in like best, worst, and average case. I think like, I don't know if it's best or worst, but it's an extreme case. I think like the government could end up like accidentally re-regulating trucking. Like I think like there was a way that could actually happen. Like, I don't know if you saw it again yesterday, but the ATA came out full throat endorsement of this Delilah's Law, which I think kind of raises a bunch of eyebrows of like, well, if they're supporting it, and I think because a lot of these, like, there's this view, which I just don't think is real, is that we're going to like making Smokey and the Bandit movies again. And I just don't think that's going to happen. Mm-hmm. Like, I think the shortfall that'll be caused by purging a lot of these, like we would call it cheaters out of the system, unsafe, unvetted, unlicensed, in many cases, carriers. I don't think they're going to be replaced by like uniform wearing drivers making $200,000 a year. It'll shortcut automation and it'll push a lot of volume back to the contract fleets.
Yeah. I think you're right in regards to, I think people get caught up in headlines, Ken, very easily, and they think it. And I'm not saying that there aren't problems out there, right? Like I've been doing this job for a very, very long time. If there's anything I am qualified to talk about outside of flatbed freight, is what actually goes on behind the in the market in regards to the driver pool and everything else. And there's a lot of headlines that are very, very catchy out there, and people only read them and them only. It's very easy to market some of these things. The actual application and rollout from the federal level is going to be a completely different story. And I think that is where the hangup is going to be. And again, I think, like I've mentioned on the show numerous times, the current administration's dropping the hammer on a lot of this stuff, but bureaucracy takes a very long time to be rolled out.
Yeah, I'll offer you one counterpoint to that. I think the one thing that the Trump administration learned, and this is a completely apolitical comment, it's just an observation, from the first term to the second term. So in the first term, they wrote a lot of executive orders and got a lot of legislation passed that was like highly prescriptive and highly detailed to the problems they were trying to solve. Well, the approach they've taken this time is to be, I think, deliberately vague, because like if you read, again, we've got a couple legal, like obviously, shocker, DAT has lawyers. I was just chatting with a couple of them who read the bill, the marked up bill, and they're like, well, how could you actually ever enforce this because it's written so vague? I think that's kind of the point.
Mm-hmm.
I think like they face such a challenge with the courts when they've been overly prescriptive and overly specific on what they're trying to do, that like by saying like anyone who has a foreign dispatcher, a dispatcher with a foreign principal place of business, well, like could an office building that houses the BPO be a principal place of business? And then there's fines attached. So I agree that it'll be difficult to administer, but in a lot of ways it could be easier to parry away legal challenges because the legislation, if it passes, has been written so vague. And look, like TIA has come out in very strong advocacy of the Stalilas law, as has ATA, as has OIDA. I do think, like, I'm not a policy expert, but the nuts and bolts of it make a ton of sense to, like, again, a state school grad here. Like, yeah. I think truck drivers should be able to speak English. I don't think that's a controversial topic
at all.
The abuse of the non-domicile CDL program is, like, at this point, very well documented. And I think so long as they can preserve the edge cases, which the program was instated for, like, I'm in favor of, like, wide-scale reform there. I mean, these overseas dispatchers who are the ones who are acting like brokers, I think should be dealt with. And that's the position of the TIA. And I don't know that you'll find many people that disagree with that, except these folks who are doing like brokerage work without the bond and without the business requirement and without the liability and insurance.
I'm right.
If you're a shipper, you want to know who's handling your freight above all.
Yeah. And I think that's going to be another iteration of requirements to move freight here moving forward is going to, like, again, most shippers require you to have cargo insurance as a broker, right? Like, I know it's not required by law. I don't need this education. Every time I mention this, it's undoubted somebody has to have a comment. We don't need it. I know, but I think that your ability, and this is where, like, fast forward a couple of years, that golden age that you're talking about there, Ken, I'm in alignment with you on that. There is going to be the people who can show we are immune from all of these headlines that are going on out there. You're going to get a gold star essentially from the FMCSA. That is going to open up doors of opportunity that have been shut for probably a decade for people. And it's going to, the more and more that this stuff comes down, like, again, I think that they're going to drop the hammer on the blatant rule breaking that's been going on out there. And when the playing field is level, and that's all I'm asking for as an entrepreneur. I'm not asking for handouts. I'm asking for a level playing field. Everybody held to the exact same standards. When that happens, that's when that golden age is going to come back into trucking. That's the golden age I'm describing.
Yeah, I think the thing that we need to be mindful of is that golden age could be 15 major asset-based national trucking companies. Yep. Like, I think we've got to be careful. And again, a lot of this is happening based on, I think, what's selling in the media. Like, I think the head of the DOT is a media guy. I think, like, they've latched on to this as being something that's popular. And look, things are popular for a reason. Again, that's back to my theory about sniffing your own farts. It's like,
Yeah.
I get it's popular because people are sick and tired of seeing headline after headline of people getting killed on the highway by someone who couldn't speak English or wasn't, came out of a CDL mill in Minnesota. Not to pick on Minnesota, but
I will.
so it's popular for a reason, and I'm glad they're addressing it. But I also think like there's other massive systemic issues in trucking that I would also like to see some similar attention. Like Matt Leffler says all the time, 1 in 4 vehicles, commercial vehicles, Class 8 trucks are unsafe at any speed. Like that should probably be addressed too.
Yeah, I'm right there with you, man. I think that it's very easy to manipulate algorithms today. It's very easy to manipulate people's attention. I could just sit up here and just be pro-Trump everything 24/7, 365, and it would skyrocket my ratings out there, Ken, because like there's the forever Trumpers and the never Trumpers. Then they just argue in the comments and it does great things. And I think that we're at an attention-seeking only, headline-seeking only day in media and information. And that is going to continue to drive a lot of people's attention span. So it's like those core fundamental issues that you're talking about. And what I agree with Matt and I have discussed in depth on this show. I don't know if that's going to get the attention it deserves in the foreseeable future. I think like one of the best lines I ever heard was, if it bleeds, it reads. And that is going to be the mentality that we're going to see amplified here.
I can't, it's hard to be, because you get painted as again, it's all about taking feedback and maturing, right? I think like sometimes my frustration of I tend to lose sight of being thankful and grateful of progress, even in spite of bigger problems. So I think like, I think tip of the cap, I think like these are things that have been nagging the industry for a long time. And I hope they shut down the CDL mills, and I hope they raise the barrier to entry. But I think like, again, I see a lot of people on FreightX and other places who are cheering from the high heavens that, justifiably these unsafe immigrant drivers being pulled off the road. And, a lot of them have their trucking company in their profile, and I go look it up, and they're 30% vehicle out of service and 25% driver out of service. And they've got 2 fatal crashes in the last 24 months. And it's like, well, I hear you, but also they're coming for you too. And they should be coming for you too, because like, I don't know, with the technology we have available, with the modern age of AI, like the government should be looking to adopt ways to say like, look, if you've got more than 1 standard deviation above the national equipment out of service, you're given a conditional rating until you get it below there, or you get an on-site officer inspection, something like that. Why couldn't we do something like that?
Yeah, I think it's, and I brought this up, is like just down to the ability to read and speak English, right? Like if we're attacking illiteracy as a whole, every single valid CDL holder should have to retest. And I think that is how you remove any and all prejudice from this conversation. It's like, hey, we made everybody retest, because we want people who can read and speak English operating heavy equipment on our freeways. That's the fastest way to do it, right? Just do that and be done with it. And I feel like that right there is like to your point about the people celebrating the crash data, and then you go pull up their information, and like it's only a matter of time, right? So it's like, if we're going to do it, let's do it. Let's rip the Band-Aid off and be done with it.
Yeah, it's funny. Like we have a mutual acquaintance, right, who likes to voice their opinion on LinkedIn and other places. And I think one of the things that we went round and round on was like, well, the national illiteracy rate in America is like 28%. It's like, well, that's overly biased towards immigrants. I'm like, okay, but like, even if it was 14 amongst non-immigrants, like you're going to pull 14% of the driver pool, actuarially speaking out.
Mm-hmm.
Like, I don't know. I think all political beliefs aside, the sense that like is illegal immigration and CDL mills and the inability to speak English in like the kind of modern day indentured servitude that some of these immigrants are going through problematic for the industry? It's like, absolutely yes. Is it like the sole fault point of like, once they're gone, so to speak, does this industry go back to being Burt Reynolds? It's like, I don't think so, because I worked here in this industry 15 years ago before this was a topic. And guess what? My first week on the job at FedEx, I attended an internal presentation about illegal CDL mills in northern Minnesota coming across the Canadian border. Somali immigrants coming into Canada because it was easier to cross the border at that time. Yep. Going across the border in northern Minnesota, going to a CDL school, air quote, and being on the road within 48 hours. That was happening 15 years ago.
Yep.
Before Biden was still a senator,
Yeah.
Right. So yeah, I mean, I guess it would be just as in vogue to blame Obama, but like again, the point was there was no like trucking action plan or flow initiative or anything going on then. It's just been a problem, right?
Yeah.
Free markets require, like, if you think about manufacturing, they require strict boundaries around to prevent externalities like pollution. Trucking is like they deregulate it and they're like, have at it, everybody.
Yeah. No, I know what you mean there, man.
Can't do that. Yeah, you can't do that.
No, I know. I mean, and I'll say it, and we'll wrap up with this. Standards are a good thing. You know, like ultimately, when you remove all of this stuff, standards are a good thing. We need to increase or improve the standards of this industry as a whole, as a fundamental. All people need to be adhered to the exact same. Like, again, I just want a level playing field. I want equal opportunity across the board. And I think that is a direction we're starting to head in. But again, there's a lot of stuff that could die on the Senate floor. So you never know. And, you know, I want to see more and more of a roll up. But as always, Ken, I appreciate your time, man. Everybody go follow Ken on social media, on all platforms. He's electric out there. And I love following him. And Ken, I appreciate your time. But go ahead.
I was going to say, thanks for having me. Hope you have a great spring season, great Easter, great spring break, and talk to you on the next one.
We will. We'll talk to you soon. Take care, everybody, and we will see you tomorrow.
Came back with a bang, window down, yelling out money, anything. Ayy, ooh, got the foot on the gas, pedal to the metal when I'm getting to the bag. Ayy, got the foot on the gas, pedal to the metal when the lane moving fast.